a lot. Um, we will just wait for people to join few minutes, and before we do that, um, guys, Dimitris has a very interesting story because half Greek, right, half Polish, moved to US. But I leave it to you. Give us the that personal story of how did you end up in US doing RevOps, and what's the whole story with Greece and Poland, because it's a very international and interesting story.
Yeah. So first of all, thanks for having me here and inviting me to this conversation. I'm glad to share all of these personal stories and also the other that are more professionally related. So yeah, I was born and raised in a Greek family, but in Poland. That's quite unusual, especially for those who are Polish. I definitely was feeling that at some point I want to explore. Um, and HP at some point offered me the great career and the opportunity to do that. So 2005, 2006, that company was investing heavily in Poland. One of the
Mm,
first BPO centers was built by them and acted almost like a academy for future BPO business in Poland. So um, yeah, and as this place was growing and progressing, I realized that there's a lot of opportunities within the company, and I was offered to move to Switzerland, from Switzerland back to Poland, continuing the projects that I started over there. And I got phone call from someone who offered me a job in Spain, pretty glamorous place, Barcelona, and so I accepted moving over there before I moved to the United States, and that's where I am since 2013. So, um, yeah, the company offered me a lot of development and personal experiences, in all these places.
when I look at your LinkedIn, and I see that at HP you actually did finance, yeah, like accounting, and now RevOps. I'm just curious. Do you see like similarities? Is it helping to have that finance mindset in what you do today, in your own venture, like the RevOps venture, and at the RollWorks, because you were there also, and now today at DevSkiller.
Yeah, I think very much. I think just to mention, I started in finance operations at HP. That's what this whole center, BPO center, was at that time.
Mm,
But I think it was offering unique opportunity to learn more about measurements and metrics, and all of that was always a part of my personal interest. Um, Having an opportunity diving deeper into productivity and opportunity to optimize, I think was just naturally bringing me closer to finance than anything else. And when the opportunity came from Switzerland, that was a purely finance like job, which fundamentally changed how I think about finance and how I think about the revenue operations as well. So uh, I think there's a lot of similarities in terms of how you're building measurement, how you're looking at your key decisions from the financial point of view. And I think finance is giving you this great opportunity to see how all of these actions, all of the initiatives are actually ending up in the financial statements. And as we all know, this is what the investors are looking at, right? Whether you're a publicly traded company or a privately owned company, you're still going to analyze, your financial results. So um, I think revenue operations is offering you being very close to the decision makers and be the key partner, um, you know, uh, to the decisions they need to make around the go-to-market strategy and a lot of the tactical decisions. So knowing how those decisions translate, into the financial statements, I think it's it's a kind of unique skill set that a lot of finance people can offer being in this role, and that's what I leverage. Yeah.
So when I was having the uh, prep for a webinar with the guys from HubSpot, with Dan from there, an executive, he was telling me that, man, like RevOps can be really boring. So we need to pump it up and make it more interesting. And is that's something that I was hearing also. Um, from finance. Yeah, like people were telling me, oh, finance is boring. So what makes RevOps more interesting than finance?
I think you are on the financial side. You're usually dealing with a very um, settled numbers. For the
Mm,
most part of your work, right? There's obviously a caveat here that I need to make around how you do the planning and strategic planning specifically. So that's very much future looking like work. But if you look at it from the month and close and quarterly reporting perspective, that's pretty repeatable work, right? What is making the revenue operations more interesting is that you are predominantly spending your time around like figuring out how the future will play out based on these decisions. And I
mm,
think that knowing how to model out these decisions and potential outcomes is making this revenue operations way more attractive.
mm,
You mentioned that somebody said that it can be boring. In my opinion, it's up to the organization how you want to define the revenue operations, and it doesn't have to be that way. I think it's a unique position, one of the only few that is pivotal in the organization, um, that is giving you the ability to bring the multiple perspectives into kind of one analysis or one aspect of process uh, that can be quantified and eventually tell you how much you really going to make money out of it. And many organizations struggle with this approach because they making decisions based on the gut feeling instead of hypothetical outcome, and eventually trying to prove or disprove that decision through the numbers. And I think um, another fallacy around the revenue operations is that this is somehow the group of assistants that are going to run some errands or some tasks for me,
mm,
and without telling me what I should do and how I should do those things, so that it's my execution process is more focused, more profit oriented, more growth oriented, and making sure that all of the things that I'm doing are connected with the financial results. So I think it doesn't have to be that way if you let this organization do what they're supposed to do. Um, so yeah, that's kind of my point of view on that.
mm. And like this whole RevOps is getting trendy, right?
Yep.
Nevertheless, it was there all the time in big organizations, but I feel that it's getting more trendy because of the technology actually is getting more available to us, right? So um, even HubSpot, if you look at it, they are pushing this whole revenue ops agenda at the end of the day. Um, do you believe that the whole trend is because we need to actually be more careful of how we grow businesses, or it's an agenda of the actually market tech to that pushes it? I want to make a parallel with ABM because also you worked at RollWorks, and we see that all these guys um, like Terminus and you RollWorks and all these um, software service providers, they had this agenda of pushing it, both ABM and. Does it happen with RevOps? What happened with ABM that people don't know what ABM is, but because the tech companies are pushing it, everybody wants to do ABM.
Yeah, I think there are some similarities between these two. Um, However, I think the background is a little bit different, right? Like if you rethink about RevOps specifically, that concept across, having an organization that is looking across the different aspects of operations, it's not that new. That concept was, I think, introduced somewhere in the manufacturing, I think in the 60s, and then later it was picked up in 70s, described by a couple of scholars. So this is not like completely new thing. Where what is really new in that area is that it started to be translated into go to market, and I think that's the new trend, right? In this aspect, in that area. Um, and the phenomena that we see recently about talking about RevOps is somehow created by almost necessity, of in between all the companies that are looking for better operational excellence, right? Improve their operational excellence, or build that, and that is directly connected to the profitability. Many companies recently started to struggle,
Mm-hmm.
with their ability to prove the value and also deliver the profitability or break even point, uh,
Mm.
while the funding is drying out, right, or is not as easy to get as it was a couple of years ago. So at the same time, I feel like there's a lot of misconception around the revenue operations. I suddenly started to see that after LinkedIn, published the results, that this is one of the most popular terms and the jobs and on
Yeah.
LinkedIn. Suddenly we see people that were doing only one aspect of revenue operations, they becoming the experts in revenue operations, right? And then,
Yeah.
or someone who was doing sales operations is suddenly revenue operations, even though the job description didn't change.
Yeah.
um, so yeah, we need to make sure that we know what we're talking about. To me, the revenue operations is definitely the cross-functional operational team that is helping, um, company. First,
Mm.
it's a company to attain or build the operational excellence, and it's coordinated between all the go-to-market verticals, uh, the way that is financially, um, beneficial to that organization. And that's the kind of principle that every revenue operations team should be based on. Now, as for similarities with ABM, there's a definitely something to say about the education, right? The ABM came as this new way of doing, acquisition and marketing specifically in that space.
A
Um,
new way that was old, that was still from the 80s, right? The
right,
real
but
market. Yeah.
yeah, it was repackaged, right? Like,
Yes.
it was. And obviously there's a lot of new features that are helping you to be more intelligent about that, but definitely there is something, to say about education between these two. I think these misconceptions, they require a lot of time and effort put by the companies, internally or externally, just to educate their audience what it really means, what it's supposed to do, and how it works, what you need to bring to the table in order to make that work, because that's
Yeah.
that's also very often forgotten. But both of these, concepts, they have the same goal, and I think, um, to me this is very clear. Both of them helping you to save money and make your acquisition process or retention process, more efficient, right? And when
Mm-hmm.
you become more efficient and more productive, I think it translates to profitability as well. And I think that's another similarity that could tell exists between these two, concepts, right?
So if I am, let's say, a startup trying to get into Series A, should I pick up already RevOps, or should I wait, or what should I do when it comes to revenue operation? Isn't it too early for me? How do you see it?
Yeah, I mean, I think every industry has its own dynamics. I have to make sure that everyone, understands that before I say what I have to say about that. But every funding round is bringing, an opportunity to scale. and it all depends where the founders and the management wants to invest that money. If the scaling will go through product development, which usually does, but majority of that funding will go into that space, because the management thinks that that's the best investment they can make, and the product can win by itself,
Mm,
and can be maybe PLG like
mhm,
acquisition. That's definitely not something you would consider to be a good you know use case for extensive revenue operations team, right? You definitely should have someone that can help you to navigate through analytics, understanding how you can improve the process, what you can improve in this process, what are the kind of the triggers that help prospect and the customer to sign up and convert and make an upsell. But it won't be the extensive investment, right, on your end. However, if you have a more sales-led process and product, as well, and that's coming out of the nature, definitely you need to have a more extensive revenue operations team that can help you to keep that in check. It's very easy
mm,
to overspend with the headcounts. It's very easy to overspend on your systems. It's very easy to spend the investors' money, um, if you don't have someone who can keep you in check and also advise you the way that you focus only on things that really matter here. Um, nice to have is probably not an option, especially when you're a Series A or Series B company. You need to focus only on things that matter, right? I think that both cases they they're offering an opportunity for any company to strengthen their ability to um, understand the customer, and through the analytics, right? Building analytics around the adoption, product adoption, how the customers are consuming the features, which features actually are working, which are not, and that should have definitely some analytical uh, foundation built by the revenue operations, but also how you actually taking this one step further and you translate into acquisition process, right? How you um, leverage your sellers the way that they can use this material and incentivize the prospects to sign up for trial, or use the freemium opportunity, or just sign the deal, right? So
so,
analytics is a big part of revenue operations at any stage of the company. And if you're investing in revenue operations, Series A and B, definitely that should be your focus area.
mhm. So you believe that this, because you touched upon customer acquisition, right? Like, and customer acquisition cost is one of the metrics that at least all the VCs were looking at. I think you know better what data are they looking at because you're very close to that. But should that CAC be actually tailored towards, right, the GTM, the product, the maturity level, or how do you see this whole CAC as a central and critical metric when it comes to RevOps?
Yeah, I don't think you can analyze CAC without the second part of the equation, which is LTV, right? These two things
Yeah.
going hand in hand, and you need to have underlying dimensions that are helping you to compare, right? So starting with the CAC, I think companies defining this in the multiple ways. Some of them just focusing only on acquisition, some of them including also the post sale activities, some of them including even some of the product and features development, because that's only developed for acquisition purposes, right? Just to attract the prospects to try out, or just buy it. But I think there are a couple of things that can help you to keep that metric um, in check, right? So the detecting very often early signs of churn is vital for navigating recurring revenue and overall retention. But all of that, it starts with some key decisions you're making just long time before that churn really occurs, right? And
Mm-hmm.
I would call out maybe 4 or 5 areas that each company should focus on in order to mitigate the risk of having high CAC, right?
Mm-hmm.
Um, I think number one is just to set up the proper org structure, like reporting
Mm-hmm.
lines, roles and responsibilities of different individuals, participating in the sales and the renewal process, right? Um, Very often, we're creating those so-called convenience roles, um, you know, and after a while, you ending up with the multiple roles that are not necessarily acting in a cohesive way because everyone starts to see their own role in different, you know,
Mm-hmm.
configuration. Right? So you have to be careful. You have to narrow this down to the roles, few roles, and make sure that your organizational alignment is very clear, and you
Mm-hmm.
avoid the kind of low span of control from the managerial point of view. Right? Like it's a small company, you can't inflate, a number of managers and directors as well, right? So the roles and responsibilities as a result of that will become a little bit more expanded, right? It's not more narrow approach; it's focused approach. But I think you can expect from one role to do a little bit more in multiple areas, right? And for
Mm-hmm.
that reason, in each of these areas, you need to focus on key tasks.
Mm-hmm.
Um, I think talking about tasks, and that's another one, you need to introduce the task automation and self-service model in areas that this is possible, right? If you have a
Mm-hmm.
lot of data about how the customers are asking you, to do X, Y, Z, or prospects asking you, you definitely should have some sort of automation, right? There's no reason why somebody wouldn't be able to, you know, do a freemium setup by themselves, right? Or
Yeah.
free trial should be with a minimal effort as well, right? So all tasks in the end need to be somewhat analyzed and eventually automated. Um, you know, the, the 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 fourth one is a little bit more intangible, but I noticed from my experience that it helps you um, to build more efficient organization over time, right? And I know that people talk about diversity, but I'm more thinking about diversity of skill set that you bring into the organization.
Mm-hmm.
That's also a reflection of my background and how I evolved where I am today, starting somewhere in the finance, right?
Yes.
Um, that's a very different job than that I had initially. But I also see that you can benefit from um, a variety of different experiences bringing into your new job, and I think having that in mind, hiring the right people that can spark some creativity and doing
Mm-hmm.
things out of the box is extremely important, right? Especially in sales roles or marketing roles, right? This is, yeah, very open to that. Um, and I think the last one I will call out, which is the very common enemy, but that is often forgotten, is where you have individuals that are trying to design the process that is detached or not well connected with how your prospects and customers think about the problem your product is trying to solve.
Mm-hmm.
You have almost like a parallel worlds very often. This is what the customer and prospect is thinking, and then this is disjointed approach on the company side. It's not reflecting on that. It's not trying to fit in
Mm.
because they think that's how the process should look like, right?
Yeah.
So very often these perceptions need to be aligned, and I think this all of these things will help you to build a foundation around the CAC, how you're going to manage this. Now, as for CAC itself and driving the actions, you need to understand, how your spend is built behind this, right? There are different categories of spending that each of the departments need to understand in detail, especially leaders in those departments, so that they can quickly react if something is, not in line, or your acquisition, your bookings are not coming in, and then you need to make sure that those ratios are actually working well with the other metrics. And LTV is obviously a golden standard to compare the CAC to, and the three, you know, X, ratio. It's standard, right? But doesn't mean that companies follow that. Sometimes it's justified to be below if you think that in the long run it's going to give you the right return, right? So
So just to recap a bit, if we think about CAC, like what are those, and then I want to move a little bit to the next level, which is the net revenue retention. But before that, if we think about CAC, what are those costs that usually you add to CAC? Because I suppose different companies do it differently, right? Some of them add the staff, maybe, I don't know. They add the fact that they have sales reps and they do outbound, and all the salaries and all the benefits and all of that. Some of them only the channel acquisition costs, right? The ad spends and so on. So how did you see this whole CAC being broken down, just for us to have a clear understanding on what is in the this metric?
yeah, I think there are a couple of things here. So answer your question, which departments? I think there are some obvious answers to that, right? Sales and marketing, like a natural suspect. Um, but you have sometimes a situation where sales is divided between the acquisition and the post sale team, customer success or renewal team, call it, right?
Yeah.
And that could go both ways, right? If the company is having a two metrics, CAC and cost to serve, you definitely need to split some of that based on the headcounts that are aligned to the different parts of the process, right? If someone is working on the renewal side, it doesn't mean it should be included necessarily um, in the customer acquisition process, right? And therefore, they shouldn't be in that metric. So that's kind of one way that the companies are managing this. The same is with the marketing. There's a portion of marketing efforts that also go to the renewal and post sale organization, right? Feeding the customers with additional collateral, around the product, the new launches, and so on, so on. So I think it's fair to say that sometimes the obvious things are not obvious if you have two metrics instead of one: CAC versus cost to serve. Some companies are considering all of that to be the cost of acquisition, um, because they don't feel like they at the early stage of the development, or you know they want to be that sophisticated, or these teams are not proportionally big enough to make that difference, right? And so they all bundle all of that under one CAC. So it's important that we highlight that some variety of approaches we have here, right? The second bucket of organizational setup is all these supportive functions, right? Where
Mhm.
the delineation between who is doing what is not as obvious, right? And the revenue operations could be one of these examples. You have a partner organization that could go both ways, and the percentages split of the cost could go more even. Um, you have sales enablement very often is another one that is also splitting time between the organizational efforts, right? So I think each of the companies need to define that in detail, knowing who is who and how you're going to allocate some of these costs, agree on that, and then as that model is maturing, everyone can just provide the right narrative around what is inflating or deflating the cost in these metrics. And I think this can also add additional value in the conversation about what are you going to do about this if you're tracking this with a more granularity level as well, right? Having CAC as a lump sum is not really helping you. You need to have those underlying organizational contributions that are helping you to set the right actions to correct that.
Yeah. So when I think about, let's say, if we think about e-commerce, right? Like e-commerce is very much driven by customer lifetime value and bringing that customer back. Like if you do a bunch of promotions now on Black Friday, you shrinken that margin with the hope that they will come back, and there is a you retain that customer. And in a SaaS world, and when we talk with VCs, often this net revenue retention is bring up. Can you shed some light a little bit on this metric? Why is it important? Why they look at it, and how we as RevOps professionals should help our organizations in having more clarity on this net revenue retention?
Yeah, I think the definition is pretty obvious right here, but
Yeah.
NDR and NRR, these metrics are helping you to illustrate how healthy your retention process is, how well your product really resonates with your customers, so that they increasing the volume of what you were initially selling to them, right? So I think that's kind of the premise behind this, and I think it's extremely important for anyone who is investing in a company to understand not only the results but also the nature of that process. Arguably, the company that maybe doesn't understand why they have 130% of their NDR is maybe less valuable than someone who is 110 but has a very good understanding of how they can increase the volume of the sold seeds, products, whatever that is. So I'm not saying that's always the case. I'm saying that could be a case, right? So I think the key to understand in this area is to make sure that you're putting the right value-based metrics
Mm.
into your renewal team that is working very closely with your product team. All of that should be connected with your initial selling process and the volume driven uh, product as well. So let me explain this. Right. So there has to be always something that is creating a threshold or another volume increase that will push the customer eventually, as they're using and adopting more of your product, to buy more. Right. It could be in the form of consumption of data. It could be a form of consumption of additional features. It could be something that is just expanding from where they see the value, because they want to add more and more um, uh, you know ROI from that tool that you're selling, right, or platform you're selling. So if you don't define this that way, you're going to have a difficulty to make an upsell. And as you also don't have a good understanding of how your customers are consuming the features, and which features are working and which are the dispensable, which are not, which features were used or not used by the customers that actually churned, you unlikely going to be successful on the NDR and NRR metric, right? So the first one is just to make sure what your customers are regularly consuming on the product side. What were the main differences between their users journey and their best customers, right? So there's something that is considered as a standard, and how this deviates from the best customers, and
Mhm. Mhm.
how the journey is shaped. Um, what should your best customers do with your product? You have to answer that question as well, right? And because sometimes the product manager will sell me a great story about that, but that's not how the customer is really willing to use it, right? We'll have to make
Mm.
sure that there's a clear alignment between that. Um, what outcomes your churned users achieve and not achieve, right? So that's another part of your analysis that you need to be able to answer almost on a daily basis. Um, and what kind of the key features your customer was trying during the onboarding? What are the key features they're adopting, right? So in other words, where the conversation, when that adoption is anchored and how you can expand later on. You need to have a recipe for that. So knowing this early, it's helping you to be more effective, and adopt faster. So and then obviously there's some typical analysis that you need to run around, what similarities among the best users, right? And in terms of demographics, team structure, buyers, persona, right? All these individuals that are participating in the process of adopting or using, you need to have a good understanding of what they do and how they consume in their own way. So there's a lot of value-based metrics you can develop to help you to understand that before you even get into, here are my targets for NDR and NRR, and that I want to achieve. Sometimes if those two things are not connected, you want to achieve that.
Hmm. And like lately, I see more and more companies talking about the burn rate, right? Because that's the next metric that um, it's it's worrying them, and VCs talk about. So CAC, we have NRR, and now also burn rate. How do you think that we as RevOps could influence or connect this metric with the operational forecast from GTM functions, or how do you see this whole burn rate um, metric in connection with RevOps?
Yeah. So let me make a step back, because I think the burn rate is not a new metric, right? Like this has been
For
introduced some
sure.
time ago, right? So it's a simplification of some of the other financial metrics that I think it's easier to follow for people who are not finance, you know. Uh, and I think every organization should look at it from early days, and at the burn rate, right? Like the burn rate metric, it should be one of those North Star metrics that is almost treated like a holy grail of whether you are having your business on a healthy path going forward, or not, right? It's so vital to your survival that you should be always in the mix of these top metrics, right? Unfortunately, when very often that metric it's like a postmortem, right? Like it's a it's really difficult to change the past, right? You just report on this and you see how it looks, right? So you have you can't change this at this point. You can look forward and set up a set of actions that can give you some potentially better results. Um, so answer your question. I think uh, first of all, a lot of organizations started to look at this because they realized, okay, their investors are looking at this, they won't give them more money, and now I need to know how much money I have and how long I can last with the money that I have, right? So I know that from a lot of VCs, they're looking at some of the portfolio companies, and they told them just prepare yourself for no funding for the next 2 years or 1 year, right? And that's pretty harsh from someone who was just on this burn rate for some time and was not doing anything. Um, and suddenly needs to change and make a lot of cuts, right? So that's kind of the consequence of not paying attention to that from the early days, right? And spending or overspending, it is good only if you know that there's a certain return that is coming with it. But to answer your question, how RevOps could help, I think the first area that I would call out is definitely the annual planning process, right? So as you're working with finance, you need to define the box you're trying to fill in. These are the kind of the limitations you're going to get from finance in terms of how much you can spend and how this spending is connected with the anticipated revenue that should come in, right? Finance should have that tied to the cash flow statement, and make sure that that is working in concert, right? But if you take that box as a revenue operations, you should start connecting this with a set of alternative actions, or set of actions, and resources allocation between the different go-to-market teams, so that you pick the best possible combination of these actions, right? So um, if I decide I'm going to spend more money on the marketing, I should expect to see the higher volume of output in their own metrics. And we can define any area of that, but that should also prove that I'm going to get a higher volume of conversions, down the path to the opportunities, and the opportunities that will close, right? So you need to make sure that whatever you pick, it's not in kind of isolation and only one step in the process. It always has to go through multiple steps in the process until connecting this with a number of deals closed and the value associated with that, right? So that's kind of one thing where revenue operations should work. And as a part of annual planning, you're not only connecting the finance and RevOps and these only three natural suspects, right? So marketing, sales acquisition, and post sale, but you're spending time with your product to understand, what can be released and what will be released, and what will be done on the product adoption side that can help you to strengthen these decisions you're going to make on acquisition, right? So I think it's a lot of calibration and conversation in this process that you need to go multi-iteration approach that will help you to massage this and eventually land something that it's in line, right? But you never go beyond the box, right? That's kind of the one thing that you should be paying attention to. Trust your finance people. Yeah, so that's one. Another one is, I think there's something to say about the culture. And many organizations, they treat the money and the spending as almost like an endless opportunity, right? And there are different leaders that have a different approach to that. But I experienced with some of them that they only care about what they can spend in their own space. They never really take the full responsibility for company's financial situation. And I think bringing them on board with a burn rate, it helps to create a culture about that accountability. It's not only one individual that will be responsible for that number that is associated with the one department, right? But if you have to keep in mind that if you're spending the money, you're spending your company's money, your investors' money, and there's expected return on that money. So if you don't, well, there are some decisions to be made that you have to make, right? So create a culture of this, call it marshmallow test, right? Like you want to make sure that everyone is thoughtful about how they're spending money, and they balance this out with the key decisions they have to make, right? So you don't want to completely avoid any decision in that space, but at the same time you have to be thoughtful how you're spending. So creating culture matters here. The third one I would call out is your headcount investment. You have to make this through the careful deliberation process with the other teams. You want to make sure that you don't overinvest anywhere with these headcounts, and you have a very strong signal that if you scaling and you putting money into that specific bucket, you know why you're doing this. It's not just based on the assumption, oh, if I'm going to have more sellers, I'm going to sell more. Well, that's true, but let's see how each of these headcounts will will play out in that regard, right? You need to consider that every single person that you're bringing on board will need to be trained, and it's going to take a moment before they becoming fully productive. So um, unlikely you're going to get the same productivity over the next 6 months since the hiring date, unless you have a great program that can ramp them very quickly. So all these things and around the headcounts need to be sorted out before you make that decision, and you need to be careful. Remember, people cost you a lot. So and once you spend the money, you will never get it back.
Yeah.
So scale carefully. I mean, the fourth one I would call out, which is a little bit more on the leadership side. I'm calling this avoid kingdoms, right? So many leaders are trying to inflate the organization for a sake of managing the larger group of people, right? And a lot of them won't even admit that that's the case, but they're looking at this through the kind of ambition, right? They think that, okay, if I'm going to have a 20, 30, 40 people, my organization is growing, it's good for my success story, right? And I can just go somewhere else where it's going to help me to get a bigger job. That is probably true because that's how things are often working, but I don't think that's the expectation on the leadership side. I think you have to make sure that every single time when you putting someone, you bring him, you're increasing the accountability and the pressure to bring the return from that. So making sure that you can, on the one hand, keep your team focused on things that matter. You make sure that you approach this from the fit for purpose perspective, but at the same time, when you scaling, you need to know that you're on the hook for higher returns, right? So that's what is coming with that decision when you're creating that space. Another example here would be multiple agendas that are created as a result of that. Very often, my conversations with many organizations, I notice that you have a marketing operations, which to me sounds like integral part of the revenue operations team, but it's living outside of revenue operations, right? So that is already putting in question whether you have a revenue operations team or not. But marketing leader wants to keep the marketing operations under them because they're going to be driven by their own agenda, and that is creating two agendas because you're going to have a revenue operations that's representing a sales and post sale together versus some other agenda, and that's how you're going to start losing synergies opportunities, and eventually you're going to start losing money. So multiple conversations, alignments, misalignments, that is harming the company. And I think creating kingdoms is never a good thing, right? So we have to let go some of that ego and make sure that we focus on things that really matter for the company as a whole. I think the last one I'll mention is the procurement policy. And the procurement policy is very often forgotten. People, especially leaders, they see this, okay, I have a budget, so I want to spend money the way I want. And, as a result, you have a long queue of different systems, some of them overlapping with the same functionality, that it's going to cost the company money, and you don't have a good grasp of, okay, why I'm really trying to buy all of them, and how this really fits my overall systems architecture, right? So I think having a strong procurement in that space is helping you to mitigate the risk of overspending or buying things just to solve one problem while you're creating 5 other problems. So yeah, that's kind of my take on that.
Thanks for that. That's really detailed and really good on this. Now, I'm aware of time, and I thought that I will take the advantage of this webinar to pick your brain or something. And this is the ROI of RevOps. But here's the case. Um, we have a situation in which we don't know exactly, when we do revenue operations as a service, where to position RevOps as a cost, right? Is it operational cost? Is it cost that will help the companies or the clients grow? Is it acquisition? So when when our clients look at burn rate, right, and they look at operational costs, and if we are in the operational cost, right, then we are cut out. If you need to cut costs now, in your view, how should we pitch that ROI for revenue operations for companies that need to do cost cutting?
Yeah, definitely. There's um, no one approach to that, but I think what I would suggest here is that you develop the ratios of revenue operations headcounts as a part of the uh, size of the organization they're supposed to support. And each of these organizations will have their own threshold for that, right? Like the ratio between the 2 to 1, 4 to 1, 5 to 1, 10 to 1. Depending on the industry you're in, and depending on how you're selling, product versus sales led, you will have different ratios, right? So creating something like that can just relate to more or less like a standard on the market, and also define the responsibilities of that team will help to navigate through that conversation, right? There's one thing we have to remember in a conversation like this. I would definitely highlight the necessity of scaling this, right? So if you're adding a 50 additional headcounts on the seller side, and you have additional, I don't know, 5 headcounts on the marketing, proportionally they need to just help to ramp the volumes and on the marketing and sales acquisition. You need to have someone who will help to facilitate that, right? And this won't magically be done by someone who is currently working with much lower volumes. So it's an important thing that the calculation around that is not only limited to the ratios between the headcounts, but also to the scaling aspect. And as you're scaling, you need to also consider that productivity, and as a third part on the revenue operations, it will be different, similar to the kind of other functions. On the productivity, this is a little bit idiosyncratic metric because it can go both ways. It can impact the revenue operations specifically, but also can also impact, in a positive way, the sales team, right, and the marketing team. The fastest you can ramp these individuals and they can become productive, at their own organizational level, right? All of that has to be properly leveled. But once you have it and you can benchmark this, and you know how quicker you can help them to get productive, I mean, that's the kind of another way to prove the value of the revenue operations, right? And I think the last thing I'll say, revenue operations is not something that it's outside. It should be treated as some organization that's outside of great go-to-market um, uh, business groups. It should be equally responsible for every single number that the seller and marketer is, right? And
Mm,
I think in my roles, that's how I was feeling about that, right? If I'm leading revenue operations, the number that the CRO is on the hook to deliver, I feel the same way as he's feeling, right?
yeah,
In the sense that I want to achieve that, right? And for that reason, we're working together to make sure that we calibrate this properly. The same as with the marketer. If the marketer is telling me, okay, these are the targets I have, I treat this as it will be mine. So in that sense, I'm probably in a little bit worse situation than each of them individually, because I have a combination of their targets, right?
and the
Uh,
customer success. Right?
right, exactly. So I think it's a something that the revenue operations should be connected to by default, and make sure that they're on the hook for that. Right? It's not just this back end job that will just do X, Y, Z and move things and pull the report. No, no, no. You are someone who will sit in the trenches with these individuals every single day and make sure that that work is done, because that what is impacting, it's impacting the results, and you're accountable for that.
Yeah, that's a great conclusion that revenue ops is actually responsible also for go to market metrics, and should be should take ownership and be accountable for those metrics. This is a great conclusion. Um, it was an honor to have you. Thanks a lot. This was really, really great conversation. Um, and I hope we will see each other again in this world of RevOps and LinkedIn. If you drop by and you come back to Poland, just give us a shout if you visit Krakow. It would be great to catch up with RevOps people also here.
Sounds good. I would love that. And thanks for inviting me, giving me an opportunity to talk about revenue operations. If anyone from your group or the audience has any question, I'm available on LinkedIn. Please send me a note. I'll be happy to answer that. Thank you.
Thanks a lot. We will put in the follow up. Can we share your LinkedIn URL so they can
Sure.
ping you? Cool.
Absolutely.
Thanks.
Thank you.
Thanks a lot.
Cheers.
Okay, guys.